Hello traders. Today we're going to discuss five stock swing trading mistakes one should avoid. Five stock swing trading mistakes one should avoid. Okay. The first swing trading mistakes that a stock swing trader should avoid is to enter the trade at the wrong time and also at the wrong price. So you are a swing trader. The first challenge that you are facing is to enter your swing trade at the wrong time, is to enter the trade at the right time and also at the right price. You want to buy at a support level and also at the right price. You want to enter a swing trade, you want to enter your swing trade at the right time. All right, let me explain myself to you. I'm going to go now to the 3-minute time frame and I want to show you something. You see here, this is the USD card. And today, this currency pair went down from the level of 133.00 down to 131, okay, 90. Okay, that's at least 100 pips moved down. All right. So now, what I'll say to traders talking about entering a swing trade at the right time, I'll say to traders this. All right, that's the most challenging time for a swing trader is to enter a swing trade between the 1st and the 8th of each month. So just following this guideline, very simple guideline, to avoid entering a swing trade between the 1st and the 8th of each month, one can avoid, okay, volatile market, okay, volatile price activity that can cause trading losses. All right. So this is the first thing. You do not want to enter a swing trade from the 1st to the 8th of each month, and also from the 15th of each month to the 20th. So those are very challenging period for day traders and also for swing traders, especially those who are trading stock. So when you are trading, you are a swing trader, you want to know that and you want to follow that procedure carefully. Does not mean that you cannot swing trade those times, but if you want to swing trade those times, you can use a call option or put option. You can, be very, very defensive, and you want to control the risk, and you don't want to have too many swing trade open. Usually, a lot of swing traders are not aware of that simple rule for swing traders, and they will enter many swing trade during those times, and they end up losing. So if you have 4 trades, you may end up having 3 of those trades being a losing trade, which is not a good thing because it's quite a challenging swing trading period. So this is one of the first mistakes that a swing trader must avoid. Talking about entering the trade at the right time, we are also talking about you do not want to enter your swing trade on Mondays. This is my recommendation. It's not advisable to enter a swing trade on Monday and also on Fridays. So from the 1st to the 8th of each month, and also from the 15th to the 20th of each month, and also on Monday and on Friday, you do not want to be a courageous swing trader. All right. So I do not want to dwell on it. Okay. All I want to do is to highlight 5 specific stock swing trading mistake that one should avoid. So you want to swing trade like a professional swing traders. Those are the few steps that you need to take to start improving your swing trade. The next swing, so talking about the right price. Okay, so I'm going back now to the monthly chart, right price. I mean, you want to buy at a support level. Okay, so a bullish trade. How do we enter a bullish trade? The setup that we are looking for are very simple. Price breaks above a key level, forming a new higher high, and then pull back to retest the prior high or form a higher low. It's one of the swing trading setup. The next swing trading setup is that a financial instrument is bullish, is displaying higher lows, higher high, and the price form a new higher high before pulling back to retest the lower part of the channel. So those are the places, anytime the price retests the lower part of the channel, you want to make sure that at the retest point, that retest point is corresponding to a key level. So if the price is retesting a rising channel but is not corresponding to a key level, the price may continue to go down to that specific key levels. All right. Another thing that I need to tell traders, talking about the right price, we are looking for the price to break above a bearish trend line and to retest the bearish trend line. We want at the retest point that retest point is corresponding also to a key levels. So talking about the right price, you want to buy above key levels, or you want to sell below key levels. The reason is you are using the key levels as your protection. So if you have a very important key level and you are selling below, you are not the only person selling, and you are also protecting your trade by placing your stop loss behind a key level. This is about, okay, buying at the right price. The second swing trading mistake that one should avoid at all costs is the violation of the trading triangle. There is a video at George Trio YouTube channel. What is a trading triangle, or how to use the trading triangle like a pro. I recommend that you YouTube search that video so you may understand what is the trading triangle. It has nothing to do with the triangle patterns or the horizontal triangle. Talking about a trading triangle, it will take a bit of time, a bit more experience for new swing traders to get used to what we call the trading triangle. You are trading first the market, and then you are trading the sector before the individual financial instrument. A lot of swing traders are only trading the financial instrument. They are not trading the market, and they are not paying attention to the sector. Therefore, they get into trouble when the market is changing or the sector is changing. Inside the trading triangle, okay, we have what we call the fundamentals, the economy news, and the market leaders. The economy news, the fundamentals, and the market leaders will influence the financial instrument that you are trading. In fact, the fundamentals, the economy news, and the market leaders can change the dynamics of a technical swing trading. I will not dwell on the trading triangle. It is a triangle that the professional swing traders are following. So they check first, is the market bullish? Is the sector bullish? Okay, and then they check the fundamentals, the market leaders of that sector, the economy news relating to the financial instrument that they are trading. If everything is aligning with the current technical setup of the financial instrument that they are trading, then they will pull the trigger, so to speak. I will not dwell on the trading triangle, but I will recommend to traders to search a video about the trading triangle by George Trio. The third swing trading mistake that one should avoid is to trade invalid trading setup. All right, so invalid trading setup is a big issue for swing traders. Very often, a lot of swing traders are looking for their trading setup only on a daily chart. You do not want to stop on a daily chart. So talking about invalid, okay, swing trading setup, like a bullish chart pattern, like bearish chart pattern. Trader will notice, for instance, a double bottom chart pattern on the daily chart, but after further investigation on the higher time frame, like weekly chart, monthly chart, one will notice that the long-term trend is in fact bearish, though on the daily chart, one has noticed a bullish trading setup or a bullish signal. So when we see a bullish trading setup or we receive a bullish signal on one particular time frame, we need to check the higher time frame to avoid the trading invalid trading setup. Though on the time frame that we are looking at, it looks bullish or it looks bearish, after further investigation, if it's not authenticated that it is a valid trading setup, we will not trade it. So the validation of the trading setup is critical for a swing trader, especially a technical swing trader. Without dwelling on it so long, I'll leave it to traders. If you have any question or comment, put in the comment section, and I will be recording more video to clarify those mistakes. The fourth, biggest swing trading mistakes is the violation of the market environment. All right. So I was talking also about the 1st to the 8th and also from the 15th to the 20th is relating to the market environment. But when we are talking about the market environment, it's a big issue for a swing trader. You will notice that if you are still young enough, you were trading for in a year, if I go to the yearly chart, if you were trading from the 2007 to 2008, you'll know that the market environment during that time was bearish. So it's completely crazy for a swing trader to go around, looking for bullish trading setup, trying to buy, because I know some traders do not know how to sell and they want to buy all the time. And sometimes those traders get into trouble, those swing traders get into trouble because they are fighting the current market environment. They are trading against the current market environment, the prevailing market sentiment. So when we are talking about the market environment, we are talking about the market sentiment. Sometimes a swing trader may trade a financial instrument that is bearish in fact, all right, because the market sentiment relating to that financial instrument is bearish. But because that swing trader is a technical trader, he or she, has identified a bullish trading setup and decided to trade it. Or he or she has recognized, an Elliott wave pattern or a Fibonacci pattern or a trading setup that is bullish. But the sentiment relating to that financial instrument is truly bearish. For instance, a company that has a litigation holding on that company that may have a negative effect on that company, which means the traders and the investor will be bearish toward the financial instrument because of some fundamental issue or litigation that are pending on that company. So the market environment is very important for a swing trader to know what is the current sentiment relating to the financial instrument that one is trading, the market sentiment relating to the sector that one is involved in, the sentiment relating to the global market itself. The S&P 500 is here at a resistance level, is in a declining channel. While the S&P 500 is in a declining channel, it means that the market environment is bearish, especially on the monthly chart. So you see the S&P 500 represent the market, whether one is in Asia or in Europe or in America. The S&P 500 represent the market. For a swing trader, when the S&P 500 that represent the market is in a bearish channel, it's better to focus on bullish in a bearish trading setup if it's in a bearish channel. If it's in a rising channel, one will wait. So for instance, if the market itself, so the market environment, talking about the market environment, we can use the S&P 500 as a market indicator. So if it's in a rising channel, the best scenario is for it to go and display a new higher high, and then when it pull back to the edge of a key level on the edge of the rising channel, this is a good market environment because it's about to go up again. So we want to pay attention to the market environment. We are talking about market sentiment relating to the financial instrument that we are trading, market sentiment relating to the sector, market sentiment relating to the global economy. The market environment is very important for a swing trader. And you do not want to continue, to repeat the same mistake over and over. The last and the fifth, stock swing trading mistake that one should avoid is not to set a profit target. Very often you will notice that a lot of swing traders may enter a swing trade, all right, and then the price may go up. So you buy here, so price goes up, and you do not set a profit target. In most cases, some of those swing traders do not know how far the price will go. They don't know where is the next resistance level that the price will find a resistance where the professionals are likely to take profit. So therefore, they buy or they buy. So also setting a profit target will allow you to time the market correctly. So if the price is already at the target price, you want it to break above that target level because people will take profit at the target price from a pullback. That will be a better scenario, a pullback after reaching the target before entering the swing trade. Or sometimes trader will buy because they see that the financial instrument has been going down. They say it's bullish, I want to buy, but they are buying at the wrong time and also at the wrong place at a target price where those who bought it at early stage are willing to take some profit, creating a bit of pullback. So anytime one enters a bullish trade or a bearish swing trade, one should set a target. One should ask the question, where is the price heading? Using Fibonacci extension, we can forecast, okay, where the price is likely to go. Using a projection of channels or using market geometry, we can set a price target and have a bit of idea where the price is likely to go. So a common swing trading mistake is to avoid, ignore, or is to disregard or avoid the setting, okay, a specific price target. So anytime you enter a swing trade, you must straight away set a target. We're using a limit order to set a target straight away. And if you do not know how far the price may go, all right, for instance, if you have a round bottom or a V pattern, where do we set a target? All right, we project the depth of the round bottom above the neckline, all right, above the neckline to set the target above it. So you measure the depth of the round bottom and you project it here. So you want to know where is the target. You do not have to place your target exactly here. You may take your profit before that. So the point I want to make, depending on your risk tolerance, how much profit are you expecting out of the trade, that will give you a bit of idea where to set your profit target. In most cases, believe it or not, a lot of swing traders may buy, they probably go out for a few days, but those swing traders who do not know where to set their profit may see a profitable trade turn into bearish, especially on a day like this, which is the first Friday of the month, when we see a very volatile market due to the non-farm economy news. So in those particular days, we see a huge move of the price, like you see here for the USD card. On a 3-minute time frame, price dropped down more than 100 pip in the, you see, this is in 3 minutes time, you see. This is a 3-minute candlestick bar. So as a swing trader, you want to avoid those kind of scenario. For instance, some of the swing traders today may lose money because probably they were buying this currency pair. It was bullish before. They don't know, they are not paying attention to the current market environment. They don't know that you should, between the 1st to the 8th and the 15th to the 20th is quite challenging. And those swing traders, if they do not have a stronger stop loss, they will see their profitable trade turning into bearish trade. Or sometime you may enter a swing trade, all right, and it may be profitable trade and you are quite happy, you are quite confident that it will go up more. But out of the blue, if we have a high impact economy news and that economy news has affected the financial instrument that you are trading, you may see a volatile price move that can take you out of the trade, that can convert, okay, a profitable trade into a losing trade. And you do not want to do that. That's why it's so important for a swing trader to set, okay, a profit target and also to manage the trade. Ladies and gentlemen, we are talking here about the 5 stock swing trading mistake one should avoid. If you want to swing trade like a pro, those are the mistakes that the 5 swing trading mistakes that you want to avoid. Okay? You do not want to enter the trade, your swing trade at the wrong time, at the wrong place, i.e. between the 1st to the 8th and between the 15th to the 20th. You do not want to enter your swing trade on Monday, on Friday. The next swing trading mistake that you want to avoid is the violation of the trending triangle. Always trade first the market before the sector. And also, the last thing you are trading is the financial instrument that you are trading itself. Because a lot of technical traders will analyze the financial instrument, monthly chart, weekly chart, other things, but they don't want to know anything about the market, they don't want to know anything about the sector or the group to which the financial instrument belongs to. They don't want to check the market indicators. I would like to recommend a web page which we title Market Watch at dayprotraders.com, that all swing traders may go to that website and check out that web page. I was talking about the trading triangle and also the market leaders, market watch at dayprotraders.com. The third swing trading mistake that we were talking about is invalid trading setup. The validation of the trading setup is critical. You may see a trading setup on one particular time frame. You want to validate that trading setup before even considering to use a top-down trading method. All right, there are other swing trading mistakes that I can talk about, but we are talking about 5 essential swing trading mistakes that one should avoid. So another example of other swing trading mistake is the violation of the top-down trading method. All right, where a swing trader is trading only on one particular time frame and does not use a multiple time frame. Okay. The fourth swing trading mistake that we want to highlight today is the violation of the market environment. When we are talking about the market environment, we are talking about the market sentiment, which will affect any financial instrument that we are trading. Is there any economy news that is pending? Is there any negative economy news that is pending that may have a negative effect on your bullish trading setup? All right? Or is there any hidden economy news that is bullish? When you are bearish, okay, you are bearish trading, okay, a financial instrument. So you want to do those verification to make sure that you are not trading against the current market sentiment, okay. The last, swing trading mistake that we talk about today is not to set a profit target. It's very important for a swing trader to set a target and also to manage the trade, okay. I hope you have learned something from this video also. We'll remember everything, and most importantly, we'll put it into use. Some part of these trading mistakes, it will take traders a bit of time, especially the violation of the trading triangle, before traders may get used to it. Work on it gently, start improving your swing trading today, and avoid the 5 stock swing trading mistakes. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the GSTWSYS008 traders talking about 5 stock swing trading mistakes one should avoid. Happy trading to you all, and speak to you soon.